Good afternoon and welcome to the European Assets Trust plc Annual General Meeting. Throughout this recorded meeting, attendees will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. Please note that the responses to your questions will be published in writing as soon as practical after the meeting has ended. The AGM will begin shortly.
Actually, I move this here so I can actually see you. Right, good. I'm getting the thumbs up from the cameraman there. So, right, let us start. It's now 3 o'clock and time to commence our 6th annual general meeting of the company. The company secretary has advised that a quorum of members is present, and accordingly, I declare the meeting open. Firstly, I thank you for attending this meeting today, including those of you joining us online through the Investor Meets Company platform. I'm joined today by my fellow directors, Stuart Patterson, Kate Cornish-Bowden, Martin Breuer, Poike Ewan, and Kevin Troop. More about Kevin and Kate shortly. There is, however, someone I would like to introduce first. As shareholders may have seen, earlier this month, the company announced that Mina Tejgul would succeed Sam Kosh as lead investment manager with immediate effect. Mina is therefore going to be leading the investment manager's presentation today. Mina is a portfolio manager in the Columbia Threadneedle Investments European Equities team and head of European Small Cap Equities. Mina joined Columbia Threadneedle in 2018 as an equity analyst, and since 2019 has been the lead portfolio manager of the Columbia Threadneedle European Smaller Companies Strategy and co-manager of the Columbia Threadneedle Pan-European Small Cap Opportunity Strategy. That's an awful lot of Columbia Threadneedles. The board believes that Mina's experience is very well suited to deliver the company's investment objective for shareholders, in line with the manager's revised investment approach, which was developed following the board's review of historic performance conducted in the latter half of 2023. The board looks forward to working with Mina and with Philip Dicken, who is head of international equities and who will be supporting Mina as lead investment manager. Following these changes, the board will continue to monitor performance closely. I'm also pleased to report that in the same announcement, we included details of a significant reduction in our management fee charged by Columbia Threadneedle. This will result in a meaningful reduction in our ongoing charges. I'd now like to introduce two directors who have joined the board during the year. You may recognize Kevin Troop. Kevin joined the board exactly 1 year ago and did attend last year's AGM, so he may look familiar to those of you who were here last year. Kevin is a chartered accountant and will now succeed Stuart Patterson as chairman of the Audit and Risk Committee. Over a 30-year period, Kevin has held senior roles in fund management with Scottish Life, Martin Currie, and Standard Life Investments. Among another of other non-executive appointments, he is currently a director at Baring Fund Managers Limited and chairs the Audit and Risk Committee of the Baillie Gifford Shin Nippon Investment Trust. Kate Cornish-Bowden joined the board in January this year. Kate is chair of the International Biotechnology Trust and the non-executive director of Finsbury Growth and Income Trust and the CC Japan Income and Growth Trust. Previously, Kate worked for 12 years as a fund manager for Morgan Stanley Investment Management, where she was managing director and head of the global equity team. Both of these new directors have made a very positive contribution to the board since they joined. So, here's the format for the rest of the meeting. I'll make a few opening remarks, and then I'd like to proceed to the formal business of the AGM, following which Mina will provide a presentation, and we will then open up for questions, after which I will make a few closing remarks. Is that okay? 2024 saw EAT deliver a net asset value return of 8.2%, which was a significant improvement on 2022 and just shy of our benchmark return. Sadly, this was not reflected in our share price due to a widening discount, a trend which has been experienced across most investment trusts. Mina will discuss this performance in more detail. However, I would point out that since the investment performance review carried out in the autumn of 2023, which also coincided with a market trough, our share price has improved by 23%. Again, adverse currency movements have suppressed this by a little bit too. However, while net assets have recovered to over 100 pence per share, we are conscious that there is still much ground to be made up. Regrettably, one or two bad years, notably 2016 and 2022, have impacted our 3, 5, and 10-year performance record. Accordingly, we welcome Mina to her new role and wish her and Philip every success as they take the reins of the investment management role. The board has been pleased with the improvements we have made in the past 6 or 7 months and feels that the changes in the composition of the portfolio and the decisions on gearing will continue to bear fruit. I am sure the continuing members of the board will maintain that close eye on our progress. I, of course, will remain a shareholder and will be keeping a pretty close eye on it too. So let us proceed with the formal proceedings of the AGM. I would request that any investment-related questions, including those concerning the recent change in investment manager, be saved until after the investment manager's presentation. A notice calling the meeting is set out on pages 83 to 86 of the annual report and accounts, which has been in shareholders' hands for the statutory period. May I take this notice as read? Thank you very much. The report of the auditor, which was unqualified, is set out on pages 55 to 60 of the report. May I take this report as read? Thank you very much. The report and accounts for 2023, including my statement to shareholders, has been in your hands for the statutory period. Before proposing this year's resolutions, I would be happy to take any questions from shareholders regarding this document, including in relation to the resolutions being proposed today. I would ask, before asking a question, that you give your name and, if you are a proxy or a corporate shareholder, the name of the shareholder you are representing. Does anyone have any questions on the report or the resolutions? Yes, sir.
Thank you. Yeah. This is by means of a complaint. Actually, I'm actually bitterly disappointed that you're leaving us. I fully understand the 9-year rule. You understand this business tremendously well, and you've led it very well. Do you think somebody from the board could lodge a complaint with the relevant authorities? Because the 9-year rule is ridiculous, and it's a shame to see. I mean, you might be fed up and want to go anyway, but I'm very disappointed you're leaving us. Thank you.
That's extremely kind of you. The check's in the post. No, thank you very much. I've enjoyed it enormously. The 9-year rule, I think, was devised for largely for larger corporates rather than investment trusts. There are no executive directors, but that's the rule, and I'll go quietly. But thank you very much. That's very kind. Any other similar questions? They're very welcome. Okay, let us proceed. Thank you once again. If there are no further questions, I will continue with the formal business of the meeting. We'll now proceed to vote on the resolutions. In accordance with the company's articles, voting will take place today by way of a poll. This will ensure that all the votes of all shareholders are counted, including the majority of our shareholders who cannot attend the meeting but who submit a proxy form. I am appointing Computershare, the company's registrar, to act as a scrutineer. If you have already voted by appointing the chairman of the meeting as your proxy, then unless you wish to change your vote, you need not vote again in the poll, as your existing vote will be counted. If you have not voted and you wish to, please complete the poll card that was given to you when you arrived and tick the appropriate box next to each resolution. Depending on how you wish to cast your vote, signing the poll card where indicated. Please indicate the way in which you wish to cast your vote in respect of each resolution by putting a cross in one of the boxes for, against, or withheld. Please note that a vote withheld is not a vote in law and will not be counted. Once you have voted on the resolutions, then please sign the poll card and return it to the representative from Computershare. I now propose formally that all of the resolutions set out in the notice of the annual general meeting are put to the meeting. Resolutions 1 to 11 are ordinary resolutions requiring a simple majority of the votes cast to be passed, and resolutions 12 to 13 are special resolutions which require a 75% majority of the votes cast to be passed. I now declare the poll formally open. The poll will close 10 minutes after the end of Mina's presentation. If you have any questions about filling in the poll card, or if you require any assistance, please speak to the registrar's representative who is at the back of the room. Would you perhaps stand up? There she is. Right. Thank you very much indeed. I have a copy of the proxy votes which were submitted prior to the meeting, and they are available for review at the end of the meeting. All resolutions were supported by at least 92% of the proxy votes submitted. The scrutineer will recalculate the results at the close of the poll, and the final results will be announced to the stock exchange as soon as practicable and published on our website. That concludes the formal business of the meeting, and I will now pass to Mina for her presentation. Mina.
Welcome. I would like to start by thanking the chairman and the board for giving me the opportunity to manage this trust going forward. The European Assets Trust has a long history investing in European smaller companies, and I really respect that history, so it's an honor for me to take on this responsibility. It's an exciting time to manage this trust, as European smaller companies are at attractive valuations, inexpensive compared to anywhere else. It's an exciting time to manage an investment trust where we can enhance returns for shareholders by utilizing gearing as appropriate. So thank you very much for that. I will be using the word I, but please bear in mind I'm surrounded by a strong, dedicated small cap team with decades of experience. That's what's going to help support this trust and the performance going forward. Think of me as your manager, backed by this team. Have to go through the investment risk, which I'm sure you're familiar with. So here's our agenda. First, I'll recap what the European Asset Trust offers. I'll go briefly over past performance and investment review. The manager has changed to myself, so I will talk about what's changing, what's not changing. We have some learnings from the past, but it's going to be an evolution, not a revolution. I'll talk about the investment backdrop, which I find to be supportive, and I will walk you through the portfolio with its main characteristics and the top positions at the end of the first quarter, so that you have an indication for the type of businesses we want to invest in. And I'll go over 2 stock examples to give you a greater insight for what we're looking for when we invest in businesses. And I'll finish with concluding remarks. So let me start with a reminder of why European Assets Trust. The trust targets growth of capital by investing in high-quality, smaller companies in Europe. It also has an attractive high-income component with the board policy of paying out 6% of year-end NAV as a dividend. The benchmark is MSCI Europe ex-UK SMID Cap Index. The objective of the fund is to outperform this benchmark. With 50 to 70 holdings in the portfolio, the trust is quite concentrated against the benchmark, which gives you a high conviction portfolio, but diversified enough to balance the inherent risk of investing in smaller companies. This is a factual overview of historical performance. After a period of challenging performance, the board undertook a review of the company's investment philosophy and process at the end of last year. Having analyzed the past performance and its drivers, we have come up with a few takeaways. And these are the sort of changes that you might expect going forward. We will be capturing the best opportunities across our full investment universe. Meaning, we will be picking the best small and mid-sized companies and across the sector spectrum. We can do that by capitalizing on our smaller company resources and tapping into the wider research at Columbia Threadneedle. Historically, the trust has had fewer holdings. This has been increased to 50 to 70 names for better diversification, and I will continue implementing this. We won't compromise on quality. It's innate in our investment philosophy. Our companies will already be profitable and cash generative. We won't be betting on companies where the upside to intrinsic value is not sufficient for the risk being undertaken. So we will continue to invest in high-quality businesses, but not at any price. Valuation discipline is key. We need to make sure the investments we're making offer an attractive upside, and that speaks to our buy discipline. Now, sometimes we will be wrong. We also need to accept when our thesis is broken. We will jettison poor-performing holdings, recycle that capital into new, better names. We have processes to implement this, and this speaks to our sell discipline. I have already made some changes to the portfolio which speak to these points. For instance, I've added Konecranes, a Finnish industrial company, leader in port cranes, trading at attractive high single-digit free cash flow yield valuation. The company benefits from a strong and sticky installed base for aftermarket, as well as attractive new equipment opportunity thanks to increasing onshoring investments. I've also added Bureau Veritas to the portfolio, a mid-cap industrial company, which provides testing and inspection services. It's one of the leaders in a consolidated market, benefiting from investments into energy transition and security, trading again at an attractive free cash flow yield valuation. On the flip side, I've reduced a Swedish professional services company whose share price had far surpassed our fair value, sticking to our sell discipline. What makes us different is our philosophy, team, and research. Firstly, we're fundamental stock pickers, looking for the quality growth companies in European smaller companies universe. These companies have a competitive advantage that allows pricing power. They are businesses that can generate high and sustainable returns, enabling reinvestment of excess cash into long-term growth opportunities and in maintaining their competitive advantage, thereby compounding shareholder value. Secondly, we develop a collaborative team approach which encourages healthy debate and enables stress testing of ideas. We have a dedicated small cap team, a larger European investment team, and central research analysts. resources all of which we can tap into for idea generation. Thirdly, we believe we have an edge because we think long-term. Our research allows us to develop a deep understanding of companies. We focus on the type of companies that are likely to be undervalued, where the market will not think far out enough or assumes competitive advantage will be eroded. That's where we find opportunities. These are the kinds of competitive advantage that might give you a high return on the right-hand side of the slide. Then you need to assess if that competitive advantage is sustainable. We use Porter's 5 forces analysis to do that on the left side of the slide. To give you an example, ASM International is a semiconductor equipment manufacturer. The intellectual property they have in atomic layer deposition technology for chips has taken decades of expertise and is very difficult to replicate. This gives them the leadership position with more than 55% market share. With such a competitive advantage, ASM has the ability to sustain its high margins and returns while investing the excess cash in the next generation of innovation, as well as return it to shareholders. Elise's competitive advantage, on the other hand, lies in cost advantage. They are the most efficient, highest quality provider of textile rental services. Thanks to this, they have a large share in a consolidating market, which gives them pricing power. The company is hence cash generative, generating double-digit shareholder returns. As I mentioned, I think it is an exciting time to invest in European smaller companies. Macro backdrop has been challenging recently. Europe is cheap when compared to the rest of the world. Smaller companies is an outperforming asset class over the long term, but it has been weak recently. Now trading at attractive valuations, both compared to its own history and to large cap. If we take a closer look at the portfolio, you will see the characteristics on this page. These quality characteristics are unlikely to change. Our companies will have superior profitability, superior returns, which then enables cash generation and a healthy balance sheet, leading to low leverage. And they will be slightly more expensive than the benchmark, but more than compensated with the quality that they bring. The top holdings represent about 27% of the assets. You can see that active share is quite high, which means we have a much larger holding than the benchmark. That gives you a high conviction portfolio. These are all high quality businesses, leaders in their niches, cash generative with cyclical or secular exposure, most importantly, offering attractive returns. If we go to a couple of stock examples, Smurfit Kappa is a market leader in paper-based packaging. While its end markets are cyclical, sustainability trend around paper that's recyclable is supportive of long-term demand. Its competitive advantage is scale. Operating a vertically integrated model reduces volatility through the cycle. The ongoing consolidation in the industry, which the company is participating in, offers material cost savings and should provide better capacity discipline than pricing power, improving profitability. It has a good long-term operational track record and a strong balance sheet. It's attractively priced, supported by a good level of free cash flow generation. Aceleron is another example. It's a market-leading supplier of turbochargers for marine power and oil and gas markets. It earns high margins and returns with good cash conversion. If you have a turbocharger on an engine, it produces up to 3 times as much power with the same input of energy. It's a greener solution, providing energy and cost savings. The barriers to entry protecting their market position are wide. They have long-term relationships with their customers. They form an integral part of the design process. They derive majority of revenue from servicing their installed base. The business was spun out of ABB and now has an opportunity to deliver operational improvements as a standalone business. Valuation is appealing, and the company is not particularly well known by the market. In conclusion, recently we've been through a difficult macro environment. With higher oil prices, inflation, and interest rates, growth is getting affected. Small cap and growth stocks have underperformed larger companies. But with inflation now falling and interest rate cuts being expected, the backdrop historically has provided a strong base for returns. What we will change? Not much. I will be managing the trust, managing a high-quality stock selection, but we will make sure we capture the opportunities across the investment universe using a disciplined process and diversified approach to risk, all of which we believe is well suited for the investment mandate. And I'm optimistic for the outlook because the valuations that are attractive and because earnings are strong. Our stock selection of names with sustainable competitive advantage and pricing power should lead to compounding shareholder returns in the future. Thank you.
Ladies and gentlemen, that now concludes today's annual general meeting. Good afternoon to you all.